Yeah, good morning, man. Welcome to the Daily Money Market. You are actually with me, Che Yusuf. It's another week in terms of weekly market outlook, in terms of how the market is looking for entire week. We actually go through in terms of fundamental events that will happen this week, and as well as a little bit of a technical analysis. We saw last week about the market NFP non-farm payroll from United States coming out and surpassing the estimation numbers. They were estimated that is going to be 180k, and the numbers they come 275k. So they actually surpassed the estimation number. And again, all the instrument like NAS 100, US 30, S&P 500 was rallying really high, and it actually pulled back and dropped all the a little bit of points, 2 points or 0.2 points, 0.3 points, depending with the instrument in the market. Last week as well, we saw ECB, European Central Bank, actually, dropping down the interest rate with the 25 basis points. That was really, interesting because of the drop down the interest rate with the 25 basis points, but at the same time, they actually, increase in another some type of a field. So there was a lot of volatility that were coming in terms of last week, and the president, Madam JC Leggett, she's the one who was announcing, and she was also being asked, to say that are we going to carry on in terms of cutting rates by this pace that we start? And she actually answered that no, everything is going to be data dependent. So what it means is that they're going to have to make a decision based on every single month data collected from all different aspects, in terms of consumer price index, in terms of producer price index, in terms of how the labor is actually also happening. So that was the European Central Bank president, announcing the 25 basis points drop from, I think, from last week. Again, last week there was a European election. We saw a European election in terms in France. President Macron actually, saying this is a snap election, saying that the election didn't go well according to the way he actually, I think they must redo the election. So we saw the volatility coming from Euro USD or Euro instrument, pushing the price all the way down to very low point. The other stuff that happened last week, I mean, that adding on, it's all about the AI, the technology by Nvidia, one of the biggest company in terms of the AI. So that was there, again. Pushes the price a little bit down. They actually announced that they have increased their stop loss. That means the target that they say it's actually a little bit increased. So in Nvidia, the game store also, they get affected at the end of last week around Friday, because of how the global economic it was happening, because of the European Central Bank and non-farm payroll. So this week, the biggest that we're looking forward in terms of consumer price index coming from United States, producer price index coming from United States, and again a FOMC press conference that is coming also on Wednesday this week. But anyway, let's jump in terms of numbers of job that will be employed, and it comes 275, surpass the estimation numbers. So this week, in terms of high impact volatility, we are having a bank holidays on Mondays, Monday, June 10th, bank holidays from Australian dollar, bank holiday from China. No much in terms of high impact volatility there when you look at it. Going on Tuesday, that's where we're seeing GDP climate account change. We're going to see high impact movement at 8 a.m. from GBP. Moving on Wednesday, there's GDP from also Great British Pounds, high impact volatility coming from Great British Pounds as well. There's a CPI coming from China, which will happen 3:30 a.m. in a Sydney session. Again, we're expecting a movement from, all instrument from China and all correlated instrument to Chinese. Hong Kong 50 as well as one of the, indices. Moving on Wednesday, there's a CPI from US, 2:30 p.m. High movement impact there is going to happen from US dollar and as well as all correlated instruments. And again, we are seeing Canadian Bank of Canada, Macrim, speaking on Wednesday. There is also a FOMC press conference from US, 8:30 p.m. So a lot of movement that is happening on Wednesday itself. There's a CPI, there's also a FOMC meeting press conference. So we're expecting a movement from there to a lot of instruments like gold. You can pay attention, US 30, NASDAQ, S&P 500, and all correlated instrument to a dollar. So moving on Thursday, we are seeing an employment change from Australia, and as well as 2:30 p.m. there's a core PPI. So we saw CPI on Wednesday. Thursday, that's where we are seeing producer price index. The last day of the week, it's Friday. There's a Bank of Japan that is coming in terms of monetary policy, and again high impact volatility to GP 225 and all correlated instrument to Japanese yen. The last one on Friday is 4 p.m. perennial consumer sentiment. That will happen at 4 p.m. from United States. So all movement, it will happen, high impact movement will happen to US dollar and all correlated instrument to actually, the dollar. So it looks like the market volatility, they're starting from Wednesday, all the way to Thursday, where we're seeing producer price index and the CPI that is coming this week. So yeah, that's how high impact volatility we have this week. Let's try to check how the actually, the market is looking at the present. Okay. All right. Now we can see in terms of last week there was a announcement of interest rate from ECB, European Central Bank. We saw they cut the interest from 25 basis points, and that's where we were seeing Euro USD having a dip all the way. It actually gapped down, pushes the price all the way down. Euro US. That means the euros, they were not actually, gaining the momentum because of countries like France and Germany. Their CPI also, they were actually not above the estimated. So there was a little bit of contradiction between, reducing the interest rate to 25 basis points, but some other region from Europe, they are having a very difficult in terms of consumer price index. So we saw the dip. What we're anticipating this week maybe is to come all the way to recover the gap and all the way to get to the 1.8440, somewhere around there by the time we get to Wednesday, Thursday. I think by the time we get to Friday, we're expecting Euro USD to actually recover all the way to where it was, from last week, Wednesday or Friday. All right. Then we can look into UK 100. This is FTSE 100. Again, we go to a little bit of a bigger time frame. So we are expecting at least, okay. So we see that the market hasn't even break on this level of 8,290 for actually, a time now. So the anticipation of this trade is actually to come and cover 8263. In terms of Europe, I don't see high news that are happening this week. So I don't think it will actually pushes the price all the way, break the level of 8,302, 8,300, if I can say that. Maybe it might push and get to 8,300, but not to break all the way up. Maybe it will dip a little bit again. But for now, the move, it's retesting a little bit from here. Indicates gonna retest it from here. Once it retraces, start shooting all the way up. Maybe the movement will start from Tuesday, Wednesday going forward. All right. Then we're seeing German 30. Again, German 30. So a lot of instruments, they were actually, down. So we are actually anticipating this week to have a little bit of a recovery. Look at this gap. That's another anticipation of the market will come all the way, recover here, touches this position, maybe breaks and get to this level on Wednesday, Thursday. If there will be high movement because of CPI and PPI, then it might break all the way to get to 18,700. But highly I think the market will just get to 18,628 and then start again reversing back. Pushes all the way here, then start coming all the way back again. All right, other gentleman, he was looking for silver. So here's silver. It's been dipping. Silver and gold has been actually performing the same type of level. And we can see right now that it pushes all the way silver down and it's starting recovery. So pretty much it's a recovery for this week. Get to 30.636, that when it comes to silver, maybe it might pushes breaks all the way, goes all the way up because of PPI and CPI. That's as same as gold as well. We're anticipating a little bit of recovery, breaks all the way, goes to 2,359, maybe even 2,370, somewhere around those positions. So yeah, man, that's what we are actually anticipating in terms of the market. So we can see a lot of instruments, they're being on a low, and this is actually, you know, a good time that we can anticipating the recovery of all these instruments. So yeah, that's it in terms of, you know, just a quick analysis and as well as high impact volatility that will happen this week. Thank you very much for actually watching, and, you know, subscribe, share with other guys, you know. Thank you.